Hello, everyone, and welcome back to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options. Most of you are likely familiar with me by now, but for anyone that might be new or joining us for the first time this evening, welcome. It's great to have you on board. Our protocol is we have to go over some housekeeping details about the session, and then I will introduce Mr. Rob Roy, who we are all here for. So first and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website if you'd like to check that out at any time, or feel free to take a screenshot of it now if you like, but that's the main point to take away from it. Again, most of us out there are likely familiar with the Q&A process, but just to run over it for anyone that might be new, Rob will go through his general presentation. He will find some case study considerations, and then with the time remaining, open it up to Q&A. And so with the plethora of very intellectual and quality questions we get each session, we never get through them all. So just know it has nothing to do with the validity, and take that as encouragement to attend the insiders meeting when there's a 45-minute Q&A portion. Now, I have to make a point there about the insiders meeting this week. We will not be hosting it. Due to the holiday, we will be off. So this is the first notification of that for all of our paid subscribers that attend. We will send out another email notification tomorrow morning and then another one on Thursday. So again, no insiders this week. We will resume the following week. All right, so that covers off all the housekeeping details. The week started off as one might expect on a holiday, shortened week. I sure was feeling like this was going to be a pretty slow but surprising week, if that makes sense. And with today's doji, I'm not sure exactly what that means for tomorrow's trade. So without further ado, let's pass over to the expert, Mr. Rob Roy. How are you doing this evening? You feeling better?
Getting there, Zach. Getting there, slowly but surely. Still some lingering congestion and crazy. The difference between the two episodes, but yep, a little bit better each and every day. So happy to be here on a little stronger voice than last week. So improving each and every day. Thanks for asking. I appreciate it. And let's go ahead and take a look at the market. And as you mentioned, kind of the way you would expect a holiday shortened week to look. We started off with a bit of a update yesterday and kind of just consolidated that today. But look at that perfect doji that we have today. What does that mean for tomorrow's trade? That's going to be really interesting. And we take a look at the volume. And again, what you would expect on a holiday week, the volume drying up. So very low volume doji today, and perhaps something happens tomorrow. Now, I've had a lot of comments on YouTube on the U.S. market update that we do each and every week on the EWO channel, and people are saying that, well, so I've been talking about these gaps. Because we have the gap here, we have a gap here, we have a gap here. We're still overbought from the 10-day moving average, even with today's slight pullback based on yesterday's move. And I just feel like the markets are overbought, and it's a tough time to go hard to the long side, even though, as people pointed out, traditionally this is a seasonally bullish time for the markets. And there's an old expression in the world of trading, never short a dull market. And what that means is that when volume is lower, the markets tend to drift up. You get heavier volume when the market goes to the downside. And a lot of traders, depending on how well they've done, their benchmark is the S&P. That's how their bonuses are measured, which is really what they're interested in. And if they've performed with or outperformed the S&P, a lot of them just wrap it up at Thanksgiving. They're done. They're gone. They take the rest of the year off. Others that have not hit their benchmark are chasing those returns, and they trade between Thanksgiving and Christmas, but normally volumes are still lower. So historically, on average, it's a seasonally bullish time of the year. But a few years ago, we bottomed on Christmas Eve. So as with anything in the markets, nothing's 100%, nothing happens every time. We look at, trends and put as many percentages in our favor as we can. I'm a little concerned about this holiday season with the fact that we've moved so vertically here off these lows at the end of October. And then the gaps added in and the separation from the 10-day moving average feels like, if at best, we just trend sideways this week. And then we'll see what happens in the next week. Now, if we do that, we get the 10-day moving average to come up here and catch up. When there's separation, one of two things happens. Either the security, because it's the same way with any security, and no security in any time frame is very far away from the 10-day moving average. So either the security comes back down towards the 10-day moving average or up, because it works the same if it's below the 10-day moving average, or we go sideways and it allows the 10-day moving average to catch. But one of those two things is going to happen, and we will touch that 10-day moving average in the not too distant future again. Just as you can go back and look at all this time here, where we go up, got a little bit above it, came back down, touched it, a little up, came back down, touched it, got a little bit below it, back up. You see what I mean? You just look at it and you can see how we just hug the 10-day moving average. And if we get a little away from it, we come back down to it. And look where we are now. So we're separated on the bullish side. And so we'll see if we still drift to the upside with the seasonality, or if a retracement is in place due to the kind of vertical nature off those October lows. Note that there is no 5-wave impulse pattern labeled. I do have the indicator on. It's just there isn't one that's qualified within the algorithm at this point in time. We are awfully close to those highs from July, and we'll see if we try to take those out. What that means with no 5-wave pattern is this is an impulse move right here. So that would be an A wave. Even if we are going to start a 5-wave impulse pattern, all impulse patterns start with a zigzag. And that's we have that in education on our website at ewotrader.com. So regardless of whether this is just going to be a zigzag pattern or if we're moving into a new 5-wave pattern, we're going to have some sort of a corrective move at some point. The issue is the hardest wave to predict of all of them, whether it's a zigzag, flat, triangle, 5-wave impulse pattern, etc., is the initial A wave, the initial impulse. You just look for traditional support and resistance to figure out where that's going to end. And perhaps we've gone as far as we're going to go. We'll wait and see how that plays out. But at some point, there's going to be a corrective move, whether we go higher from here or not. And I would opine that it would make a lot of sense to at least come back down and test this 440 level here, fill this main gap, get back down to the support and resistance area. Maybe we come lower and fill these gaps, or maybe that's for another time. Now, that's the issue with filling gaps. It can happen sooner rather than later, or later rather than sooner. But the majority of them, the overwhelming majority of gaps do get filled. You just don't really know exactly what time frame that's going to occur. But with such a perfect doji, some sort of a move is likely to occur tomorrow. So last full trading day before Thanksgiving, and then we have half a day on Friday. So market closed on Thursday, half a day on Friday. You can imagine that most of the traders will wrap up whatever they're going to do for this week tomorrow, and then let the half day session Friday play out. Usually not much goes on there. But then the following week, we get back at it, and it could be quite volatile moving into the holiday season this year with the situation with where we find ourselves with what I've just pointed out. And I think that's the key as to why you have seasonal trends that tend to play out, but every situation is different, every year is different, and you have to look at what's going on at the time. And right now, with these gaps, the vertical nature of the move, separation from the 10-day moving average, I just think that you want to be careful. Don't get caught up just, I'm going to go long now because the market normally goes higher this time of year. let's let it take out this 460 level. If we break above 460 with follow through and we're not overextended when we do it, all right, then that would be a good signal to go long. But until that happens, I think patience is the key right now. I think as far as how we're going to play out this holiday season. Taking a look at the TNX for interest rates, you can see it's come down. It has consolidated a bit, although it's continued to drift a little lower. We've got a pretty nice little zigzag pattern set up right here, right at the 38.2% fib level, which brings you down to a 61.8% extension. And that's exactly where we sit right now on the TNX, kind of a doji there on the 10-year as well. So is this an opportunity for rates to turn and go back to the upside? Is that what's going to happen? That would certainly not be bullish for the markets, the equity markets. We could continue lower. We've gotten awfully close to filling this gap right here. Haven't quite done it, so maybe we go just a little bit lower and fill this gap right through here. As you can see, we're very close to it. Maybe we even extend to the 100% level, but it feels like we're getting pretty close to where that's going to be the at least short-term end to this break that rates have been giving us. And then we have the dollar, which continues to move lower. And now we're at a 54% wave 4 correction in the dollar. And I think that's a little worrisome as well. That's kind of hinting towards economic weakness. Maybe the dollar can find some footing if interest rates turn and go back to the upside. That could lend a little bit of support to the dollar. But we're looking for recessions. A lot of people calling for a recession in the first part of next year, and this kind of plays in with that. You look for economic weakness, and for the dollar to continue to move down like this, I think it's global, not just confined to the U.S. As far as some economic weakness. And the reason the market's moved to the upside, if you're wondering, well, why is the market doing this? If we have the dollar going down, indicating economic weakness, and that's because the market has already priced in 100 basis points of rate cuts next year. 100 basis points. So that would be 425 basis point rate cuts. So the market is thinking that, yeah, we're going to see a decent enough recession to where the Fed begins to cut rates. I think that is an optimistic view. I think the Fed will be late to the party on cutting rates. They have said, and taking them at their word for whatever that's worth. I think they don't want to repeat the mistakes of the 70s where they were raising rates and then they started cutting rates too soon and inflation came roaring back. They've even mentioned they don't want to repeat those same mistakes. So I feel like they may stop the rate hikes, but that doesn't mean they're going to be ready to turn around and all of a sudden start cutting rates. I think they're willing to let the market go down a bit. I think they're willing to let the economy go down a bit. And those two things are less severe in their mind than inflation coming to roar back. So yes, it's been nice that the data has been calmer with the recent CPI and PPI reports. We talked about that in last weekend's U.S. market update on the EWO channel over on YouTube. But again, just some data is far from the Fed getting ready to cut rates. So I'm concerned about that as well. You throw that into the mix, that pretty aggressive rate cutting by the Fed is priced in at this point, and I think that's overly optimistic. Take a look at the VIX. Here's another thing to be cautious of moving into the holiday season. We're right back down at 13, and as you can see, that's held as the low since the early summer. Every time we've gotten down to 13, we've bounced, indicating volatility. And even though when you're in a seasonally lower time of volume, still trends along this line hold just like seasonal trends may. So we're at a point of potential support here on the VIX So the likelihood of the VIX bouncing back now, it doesn't have to. We could break this level, and maybe the seasonal trends went out. You have a low volume rally into the end of the year. We get way overbought. The VIX breaks below 13. It starts to head down towards 10, 11, where it has been in the past, but rarely goes that low. Anything is possible. And that's why I'm saying that, this is a time, enjoy the holiday this week with family and friends, and kind of get away from the market for a few days, and let's let the market tell us what it's going to do. We're close enough to finding out some answers that we don't need to guess. Continuing on with other markets here in the U.S., the DIA, very similar chart here. We consolidated a bit at 350, moved up, a little bit of a pullback today, as you can see, in the neighborhood of where we were from the July highs. Once again, vertical move in the DIA and gaps here. Well, that one basically got filled, but we still have one here, and we have this big one here. And I just think it's not smart. It's not prudent to ignore that. And then we look at the Qs, which have enjoyed a nice move coming off of their low in October, leading ahead of the SPY, and no labeling of 5-wave patterns anywhere here, as you can see. But notice a new high in the Qs. So we closed at a new high yesterday above the July highs, and we still have those other concerns here. Not quite as overbought as we are on the SPY, but still gaps listed here. A little bit of separation from the 10-day moving average, but able to have taken out the July highs already, which the SPY or the DIA have not been able to do. And so that brings in, are the Qs the leader, or are they just overextended further than the SPY? Again, we'll get these answers here in the not too distant future, but it's a dangerous time to be too hard to the long side. Then we look at the IWM, which does have a 5-wave impulse pattern labeled, and it's to the downside. The wave 4 there, right near the 61.8% level, and then we had a day where we opened, traded higher, and closed near the low of the day. That indicated the end of that little move here. And so we've consolidated, allowed the 10-day moving average to catch up. So that is constructive. The fact that we've gone through some consolidation right here, and the 10-day moving average is not separated so much anymore. So we've kind of closed that gap. But nonetheless, you can't ignore a pretty well-formed 5-wave impulse pattern. So we would have to break above that 4 and disqualify that pattern before you take the concern away from the IWM. And if the IWM, as a lot of people view, is an indicator of risk, the small caps, and it's the one pattern out of the markets that's showing a 5-wave impulse pattern, and it's to the downside, that doesn't add confidence that we're going to go higher from here either. So enough to be concerned about, as I said, to just kind of pause and let the market play some things out here. There's plenty of room to trade directionally once the market gives us a better signal of where we're going to go towards the end of the year. Bitcoin holding right in there in that 35, 36,000 area. Nice consolidation. As I mentioned in the weekend update, you still got to keep that vertical move in mind. Even if you go back and look at what's happened in the past on Bitcoin, every time it's made one of these vertical moves, it's given some back. As you can see, sometimes it takes some time. Another vertical move, gave that one, all that one back. Vertically moved lower, vertical move back up, gave it right back. This is why I talk about this all the time as well. I don't like vertical moves because oftentimes the vertical moves get retraced. And so now here we sit with this vertical move here on Bitcoin that really is just consolidating, hasn't been retraced yet. So what's going to win out? What we've been talking about so often with the halving coming in at the beginning of the end of the first quarter next year, where the market, at least Bitcoin, normally goes higher into one of those events, or do we have to give some back here from that vertical move? And just as a reminder, this 4 here is not saying we're in a wave 4. We're still in a wave 3. That's what's labeled. What this is telling you is if the wave 4 were to begin today, that's where you could expect to see some support. So those are projections based on where the 3 is now. If the 3 continues higher, those projections will move. But if we break down, and what's interesting here is we have a little bit of a triangle here forming on Bitcoin. It's not a big one, but Elliott always said, don't discount the small triangles either. They matter just as much as the large triangles do. So little triangle here, something getting ready to happen on Bitcoin. It could be a break to the upside, doesn't have to break lower. I'm just saying that you see enough of these vertical moves get retraced that that's something to keep in the back of your mind as well. So pretty interesting stuff going on around the global markets, even in the cryptos that have enjoyed a pretty nice run along with the equities markets moving from the lows. Looking at a couple of the international markets real quick, EWA for Australia has had a nice bounce along with the US market. As you can see, pretty good move here, really nice little zigzag pattern right here. That's why we talk about these things. They just show up over and over again, right up towards that 100% extension on the C wave of the zigzag, which is coinciding with where the wave 4 is on the 5 wave to the downside pattern. So we've had a nice upward corrective move in the wave 4, but that wave 4 is still qualified. So we have to keep that in mind as well. And if the US market starts to head lower, then I would expect that the Aussie market would probably follow suit along with it. Our friends up north with the Canadian market, we haven't looked at that in a bit, and you can see that we have no 5 wave pattern there either, but also a little bit of a zigzag pattern set up right here. And there's the 61.8% extension, which you call this a 38.2% B wave correction. That's where you're supposed to go. So this zigzag has done what it needs to do. It can extend. It can extend to the next level up to 100%. We like to look at the DMI and see if there's any sort of support for an extended move in the C wave. And this isn't that bad. The ADX is above the negative directional indicator. There's separation between the two directional indicators. The ADX above 20. So you would say from at least the DMI standpoint, it's not the greatest looking DMI, but it's supportive more than it is hindering. And so if the EWC wanted to move up to that 100% extension, there is some support there from the DMI to confirm that move. And then the INDA in India that has been really performing so well since springtime. You can see we're kind of consolidating here over the last week right at the 45 level. So not much has happened since we talked last week on the INDA, and just some consolidation here, letting that 10-day moving average catch up. This is what you want when we got a little bit overextended last week. Let the 10-day moving average catch up, and we're right there underneath that wave 3 from September. And if we can break above 45 with follow through, then we very likely go to that wave 5 target at 47.5 on the INDA. But it's got to break above 45 with follow through first. If it does, though, the setup is there. Notice that wave 4 exactly at the 38.2% fib level there. So a logical point of support for this move back to the upside. And now we just have to see how the INDA contends with that 45 level. If it can break and move higher from there, be quite interesting. I did want to show you one of our case studies that we gave out to our alert subscribers at ewotrader.com. As Zach mentioned here, we look for case study considerations here at TradeFinder, and then you're on your own with how you handle it, what you do with it. But as an alert subscriber to ewotrader.com, we send out actual alerts through email and text for entries, any adjustments, exits, etc. So we kind of hold your hand from beginning to end of a position. And so here's a recent one in our impulse strategy, which is our directional strategy on KLA 10 core, symbol KLAC. Really quick move here. This was a nice one. Really great when they move this fast. They don't always, because the market moves as impulses and corrections. But you can see the entry alert was sent out on November 9th. It was a long call. And here was the chart. You can see we were in a wave 5 to the upside. The DMI is showing good support for a continued move higher. And we did get a nice move to the upside the very next day. And when you get a big move like this, although we didn't hit our target, but you see a significant move like that, and then look where that 10-day moving average is. So you're overbought on a short-term basis, and you get a big move like this, which pumps volatility into the call options. So that's an advantage as well, meaning that if you sell now, you might actually generate a higher price on your calls than if KLA 10 core were to pull back, let the 10-day moving average catch up, go sideways, all that volatility comes out, and then the stock moves back to the upside and breaks this high. So the stock is higher. You would think, well, the call options would be worth more, but oftentimes they're not. Oftentimes they're worth less, even though the stock price is higher and calls are supposed to make money as the stock goes up. That's why it's important to understand the Greeks, volatility being part of that. Really important to understand how all the Greeks, including volatility, factor into the pricing. So just so happened we got a really big, nice move the very next day and allowed us to generate just under 70% gain. It says 0 days. And the reason for that is the order that was sent out to exit the position, to close the position, it was less than 24 hours from when the entry alert was sent out. So it was the next day, but it was less than 24 hours. So it shows up as 0 days. It has to go over the 24-hour mark before it would show up as 1 day. So a real nice move there on KLA 10 core. And we've had several nice directional moves on this bounce that we've had since October here in the markets. But we're backing off that a bit, just as I've been commentating here since we started, that this is probably a pretty good time to just relax a little bit. And so we are as well. Pick your spots, find when your opportunities are, but then it's not a time to just go all in long in any way, shape, or form. So let's look at some of the just a few handful of case study considerations that we still have that people may be following. On BP, this goes back to October 17th, and we talked about this last week. We were holding in here in this area right there around 36. Well, we've broken below that area. We are holding 35. So if you're still following this, you can see we got a little bounce in the last few days. Perhaps if we can get above 36, we can take off again. And these oil companies, I felt were going to report good numbers, and they did, but they all issued pretty conservative guidance. So let's take a look at USO, and it's bouncing from where it needed to bounce from if it was going to move higher, right down here and around that 61.8% fib level. But it's got to get above 75 before we can start talking about oil being bullish again, at least on the USO. So that might play into your thoughts on BP. Then we had MPLX that we looked at on that same day, the 17th of October. We pulled back. We said we needed to hold 35, and we have so far. And we've got a nice little move off of that. So I think you want to, if you've been watching this one, just continue to watch it. As long as we don't break below 35, perhaps we can mount some sort of a run. We still have a pretty well-formed 5-wave to the upside pattern. If the market breaks down, most stocks go with the market. So this one may fall and come back lower with the market if it does indeed break down. But as long as we stay above 35, let's hang in there. And then we look at GLD. And so keeping an eye on GLD. We talked about how we needed to get above this 185 level, and it just hasn't been able to do it. It's tried and tried, but just hasn't been able to break above that 185 level. And if we could break above 185, then perhaps we could have something moving. But watch what happened. So here we are, and boom, today got above 185. But as you know, if you've been following along, one day doesn't mean a thing. We have to have follow through. We have to have that confirmation day. And notice the last time we broke above and closed above 185 back on the 27th of October, no follow through day, closed lower the next day. And here we came back down to 180. So we held support at 180. Now we've got another close above 185, which puts a lot of emphasis on what happens tomorrow. But it is nice to see at least an attempt or another attempt from GLD. As you know, we've been waiting for a solid bid out of the metals, SLV and GLD, for quite some time. And so that nice move there, let's see if it can give us the follow through. And then we can say, all right, maybe we have something finally working here in gold, in GLD. And then last but not least, we MPWR last week, and you can see that once again, no 5-wave pattern, but we had a target price of around 600, and look what happened the very next day. Boom, nice move up. The next day, 12 points higher, and we've just been consolidating that move since. So far profitable. If you tried to look at this, one of the issues that you might have found is the spreads are very wide, and since it is a bit of a volatile stock, that's super volatile when you look at the bars, but you're trading over $500. So, like this, the move the next day was 12 plus points. And so, they widened the spreads. So you might have found it a bit challenging to get filled on that if you followed along with it. But nonetheless, it's moving in the direction what we thought it would go to. It showed up on my impulse search numerous times, and that's unusual. Oftentimes, the stock will only show up one time to where the confirming indicators give it enough of a signal to take a look at it. So when you have one that shows up multiple times, it does create interest, and that's why we use that as our case study consideration last week. And so again, so far so good. A little consolidation here, and there's a 10-day moving average. If you're wondering, well, why is it going sideways? Well, there you go. With that move on last Wednesday, we needed a little bit of time to consolidate. It moved up on Monday as well, and then or on Tuesday when we looked at it, and then moved up Wednesday, and so some consolidation here, which is warranted. All right, so let's see if we can find us a case study consideration now after all that I've just talked about, as far as being perhaps a bit cautious moving into the holiday week. If we look at the impulse search, there are 5 results, which is normal. A few of you commented on YouTube, and love the comments on our market update on YouTube, where you said, hey, you had a lot of results there on the impulse search. Does that mean that we should be putting on a lot of trades? And normally, when you see something like that, it tells you, yeah, the market is moving strongly in one direction, and that's something that we should do. But I've given you all the reasons why, even with that many results that we had last week, you still want to be a bit cautious right now. Now, one that's caught my attention here is Visa, which is another one that's shown up a couple times this week already on the search. So it showed up yesterday and today, and you can see the move to the upside that occurred today. And we take a look, and we are kind of extended on that wave 5, which is a concern. But when we look at the rest of the indicators here, I'll just leave the DMI on. You can see that we've got the ADX curling up, and the positive directional indicator has bounced back to the upside. The negative is moving down, and we've got plenty of room here. We're not anywhere near 40, which is the area of concern on the ADX. And look what we've done. We've broken above a major point of consideration there at 250. So same thing that we talked about with GLD. There's a break above a major point of resistance. So 250 had been resistance for quite some time. Can we follow through? Can we get a follow through day tomorrow with that and continue to move higher? And if so, then perhaps there's a little more of a run in Visa. I mean, that would make sense, right? Depending on, are we going to have a recession? Is the consumer going to spend? They're going to spend something, even if the spending, pardon me, is disappointing. The consumer is still going to spend something, and that could be bullish for Visa. So, from a fundamental standpoint, we're not big fundamental traders at ewotrader.com, but it is always helpful if you have good, solid fundamentals underneath a solid technical chart. So if your technical analysis is good, you're backed by good fundamentals, it can't be anything but a good thing. So that makes sense this time of year, and we'll see if we can get the follow through tomorrow. So keep an eye on Visa tomorrow. In response to everything that I've mentioned, as far as the concerns about everything else, we're going to go ahead and put that down as our case study consideration for this week. We're going to put down Visa, but we're going to put a little asterisk there and make a note that it has to have a higher close tomorrow. So you wouldn't want to do anything with this till towards the end of the day. And if you can see that we're going to have a higher close, towards the end of the trading day, then you could look to do something to the long side there. So we're going to put down Visa with a little note if closes higher on 11/22. So that there's a case study consideration with an asterisk there to see if we get that higher close tomorrow, the follow through day that we need. And if so, then as I said, looking at the DMI, we do have some room here. Just with the ADX under 30, we could continue to move higher from here, which would make a lot of sense. So with that, Zach, that's pretty much what I wanted to cover tonight. And without spending a whole lot of time looking for case study considerations, we've got a couple extra minutes for questions tonight, and that'll be helpful. As you said, we will not be doing our normal insiders meeting that we do for our alert subscribers on Thursday in observance of the Thanksgiving holiday. So I'll take some questions if we have some, as long as the voice will go. My throat lozenge is about gone, so we'll see how long we go.
Yeah, no, we'll keep that in mind. But I was going to say your voice sounds almost back to 100%, so that's great to hear. But with the chart you have up there, Visa, actually our contest winner, Will, says long term it's been awesome, and so we'll have to see on the 22nd if the case study consideration plays out well. So
based on Will's comment here, you go back and look at a weekly chart, also a 5-wave to the upside pattern, and the 5-wave is extended less than 100%, which would lead you to believe that there could be a little bit more there. The issue here on the weekly is the ADX is not as high as you would like it. If we're going to break above this resistance level here at 250, but we've done it on the daily chart. And perhaps if Visa continues to the upside on the daily, then that uptrend on the weekly chart can continue as well and garner some support for a continued move on the DMI. So interesting to look at the longer term view on that one.
Yes, indeed. All right, and so we have a couple of requests for MSFT.
Oh, good old Mr. Softy. Microsoft, which has been a pretty amazing performer. Now, the issue that we have here is when you take a look at the DMI, you can see the ADX is at 40, and that's the level where you start to get a little concerned. It doesn't mean that the trend is over, but it's telling you the strongest part of the trend is over. You can see that back here, we did continue a little bit higher above 40. We went to 50, but then we calmed down a bit. We had a little bit of a kind of a blow off top there in July, and then we pulled back. And that's what you would expect once the ADX moves above 40, is you're looking for, well, the strongest part of the move is over, and maybe the entire move is over. So that's something to keep in mind on Microsoft. But here we are above the 360 level. So we took out that wave 5 high from back in July. So new high on Microsoft, not overbought from the 10-day moving average. And again, just because the ADX is at 40 doesn't necessarily mean the entire move is over, but it does mean the strongest part of the move is over. But we could still easily go up towards this 400 level. The algorithm likes that level for some reason. That's why it has a potential wave 5 down the road. Remember that when you have this 5 labeled like that, again, the algorithm likes that price for some reason, and you can either have a corrective 4 and then a wave 5 move to that level, or the wave 3 can continue up to that level before the wave 4 correction occurs. So it does seem that Microsoft and the not too distant future is going to see 400. The question is just, do we need to correct first, or does it run right there? Just a little bit of caution here from the ADX. Note that that positive directional indicator has broken below the ADX. So again, the strongest part of the move is over, but we could still have a low volume drift higher on this, along with the rest of the market, if that is indeed going to be the seasonal trend this year. Or again, the opposite side of that is when you have low volume, that can aid in volatility. So even though the normal course is a drift to the upside, if you get a move lower, it can be exaggerated with the lower volume with increased volatility. So these holiday lower volume periods are always interesting to watch.
Yes, indeed. And we still have a number of very great questions. So I want to try and get through as many as we can, especially with not having insiders this week. However, we did just have a comment come in through YouTube from Fluffy Lolita that Rob promised to cover someone's comment about where we are re the grand super cycle and the grand super cycle down. I guess you were supposed to answer Tuesday, so I'm holding you accountable to your promise.
Okay, I will do that, and we'll finish off with that. So
okay, I was going to say to make sure that we got time. You know, it might be an extensive explanation that's required. So,
well, you start to get into, when you start to talk about super cycle, grand super cycle, now you're getting into decades of time. So you start looking not just at weekly charts, but even monthly charts when you start talking about periods that are that long.
But perhaps we dedicate a webinar to that. And
well, no, I did say that I would talk about it tonight, so we'll do that. We'll close off with that. I'll look at weekly and monthly charts, and we'll talk about it at the end. But let's take a couple more first, and we'll let that be the grand hurrah here at the end.
Grand hurrah! See what you did there. All right, so we will go over to PI for Larry.
PI. Not super familiar with this one, but my goodness, it is in about as classic of a 5-wave LA wave downward pattern as you could be in. The wave 4 is right at 38%. Now, it doesn't have to hold there. That wave 4 could move up all the way to 61.8%, meaning that this bounce in the wave 4 could continue higher and still stay qualified in a 5-wave to the downside pattern. However, 38.2 is a prominent Elliott wave, Fibonacci ratio. And so it makes sense that it's struggling here, going sideways at this 38.2% level. It was a little bit overbought, so the 10-day moving average is catching up, so that could play into it as well. Notice that the ADX is almost to 50. That's a concern as far as how much oomph is left for this to continue higher from here. We do have the positive directional indicator breaking down. Even if this does go a little bit to the upside from here, it's not going to go much higher based on that. DMI is telling you that not only is the strongest part of the move over, but almost the entire move is over. I think that at best you could see a run up and test 100, so a little bit of a drift higher from here, but I'd be cautious of being too bullish here. Keep your stops tight. There is some resistance there at 80 from a price standpoint as well. You go back and look at where you were back there in May and broke above it, tested it in June, a little bit of a bounce, kind of tested it in July, but gave it up. And so now what was support becomes resistance, and that's where we are with resistance. So if we can break above 80, perhaps you see 100, but I don't think you go higher than that. And I'm not even convinced that we can do that much at that fib level. So that's a really extended ADX. Any further upside here, I think, is almost a gift. So if you're long, just be cautious.
Very well. Let's go over to the Nifty for Shyam from YouTube.
Okay, so we looked at the INDA, but I know a lot of people do like the Nifty better. So we'll cover that. We used to look at the Nifty, and then people said they wanted the INDA, like how we used to look at the XJO for Australia, and then people wanted the EWA because it's more liquid, easier to trade, and not as expensive to trade. So we had that same kind of issue with the Nifty. So once again, looking good in the India market here, and a little slightly different pattern, which is interesting, but not too different. Where we were at 45 on the INDA, and we needed to break above that level on the Nifty. We are kind of breaking above that September high, but we really couldn't hold it today. So we opened and came back down. So we're right at this resistance at 49.5. We need to break above that. Now look at the DMI down here. The ADX is trying to break above the 20 level. It has to do it. You look at that and you're like, oh, tomorrow the ADX is going to be above 20. You got good separation between the two directional indicators. The ADX is breaking above the negative directional indicator. You got everything that you need for the DMI to show support. In other words, that there's enough strength to this move for it to continue to the upside. But with all that said, people that have watched us enough and seen us talk about the ADX know that there are times when that ADX will go up towards 20 and look like it's about to break over it and then just roll over and come back down. That's why that 20 level is so significant. So you want to see this one could really give you a nice run if it cooperates. It would have been nice to see a higher close today instead of coming back to support. But if we can break above this 49.5, let's say 50, if we can close at 50 and get that ADX above 20 and still maintain this separation in the two directional indicators, again, that could mean that the India market is ready for another run higher. But those things have to happen first. It's awfully close, and it looks like they could happen, but they have to actually happen. So, but yeah, looks something to certainly keep an eye on as far as a potential long trade there.
Very well. And our subscriber JJ was kind enough to write in the chat to not forget to smash the like button, and I just wanted to echo that. We do greatly appreciate it. It goes a long way. We've gotten some positive feedback, some positive comments since JJ's comment there, so we appreciate you all. And yes, it does go further than one might think. So we're gonna go over to a question actually from LinkedIn. The SPY was already covered, which was one of the requests, so I'd encourage you to go back and view the recording, which will be available shortly after the live session is complete. But the other question was on the US 30.
What's the symbol for the US 30? I'm not sure.
See if someone beats me to it.
Yeah, if somebody has a symbol, I'm happy to look at it. So I mean, the Dow, is that what they're talking about?
Yeah, the Dow Jones Industrial. Yeah,
Okay. All right. Yeah. Not really heard it called the US 30, but it is the 30 biggest companies in the US. So I guess that makes sense. And we looked at the DIA as well. So this person, happy to have you from LinkedIn. Thanks for joining us. We have all the social media platforms. But we did look at the DIA earlier too. We do have a very similar pattern to the SPY where we're getting up near those July highs. We're getting awfully close. We're not there yet. So this is very reminiscent of the SPY. We had a big move yesterday, just like we did on the SPY, with a little bit of just quiet consolidation today. Kind of a little tiny doji there where we have a more pronounced doji on the SPY. We do have a good looking DMI here, which would be suggestive of a possibility that we could break those July highs, just like the Qs has done. The Qs need follow through, but they at least broke it. And these are in an area where they could, if we do get that seasonal move to the upside. But gosh, as we talked about in the very beginning, there's some things to be concerned about. So yeah, I would echo what Zach said. Go back and watch the first 10 minutes is all you need to look at, and you'll get a lot of commentary on both the SPY and the Dow. So
yes, indeed. All right, we're going to go over to a question from Banny. Hi, Rob. This would have been for Jeff, but in straddles and strangles, can we take longer expiry dates and close one leg, which is profitable, and leave the other one open? Can we take a look at NEO and also add to the MSTR position since it came down? Go first.
Yeah, that must be for Jeff on MSTR. Oh, MSTR, MicroStrategy. Yeah, I'll talk about that in just a second. I was thinking of Microsoft, but yeah, MicroStrategy. I'll cover that one here in just a second. NEO, the market in China seems to be calming a bit, and there are some electric automakers that, based on some numbers, are taking some share from Tesla over in China. NEO has been unable to catch a bid yet, but it certainly has been holding for quite some time in the 7.5 level. Some of you that have been with us a while remember we used to talk about this a lot, but with kind of the craziness lately, not so much, but the launchpad effect, where you have a stock that goes sideways for a while and then takes off. And a good example of it is here. I live on the Space Coast when in Florida, and so that's kind of where that moniker came from. But the stock goes real sideways, kind of that launch pad, and then takes off just like it did back here in July. That's the kind of move that can happen when you have this long consolidation. The problem is you get that vertical move up. What happens? Same rule we talked about, comes right back down. That's the problem with the vertical move. You would rather it just kind of, instead of just the blast off, let's just move in a 45-degree angle. Those tend to hold. You don't get as much volatility on the corrective moves. The market's full of impulses and corrections. So perhaps we can continue to consolidate and make some sort of a break higher here on NEO. That would be a welcome move. But let's just not go so vertical like we did back here in July, so that we can have something that could hold longer term. Now, MicroStrategy is very tied in with Bitcoin. They own a ton of it, and so from their business, they tend to move as much with Bitcoin as they do from their own business model. Now you can see the ADX is high, so that's a concern. We're in a little bit of a consolidation here. So we got a nice little triangle right here in the wave 3, and look like we're trying to sneak out from above it, but it has to do it. So as far as adding to it, this stock can move like crazy. Yeah, it did back up today But as far as adding to it, let's let it break out of the triangle. And if it breaks out of the triangle, then we'll add to it. It's volatile enough that it could make that back in an hour with the way, if you watch it intraday. But it is interesting to see, I showed kind of a larger, or not larger, but longer triangle that's being formed in Bitcoin. And so, it's kind of mirroring that is what's going on right now. So as far as adding to it, let's let it, if it breaks out of that triangle, then we can add to it. And that was in our speculative portfolio because it just didn't have every little piece of the rules in the impulse portfolio, but it does give us an opportunity to kind of trade with a continued move in Bitcoin if it is going to follow what it's done. And, nothing's 100%, but as we've said in the past, each and every time Bitcoin has had one of these halvings, it's rallied before it. And so this gives us an opportunity to trade along with that without having to actually go buy Bitcoin at 35,000 or whatever, or buy pieces of it as you can do in some ETFs that are coming out, etc. But anyway, yeah. So I wouldn't add to it yet. Let's let it break out of the triangle to the upside first.
Very well. Thanks for that detailed explanation there, Rob. And so I see we are at a minute. Well, actually, we're just now at time. And so I want to make sure that we provide, yeah, it sure does. It seems to only move faster. And I want to make sure that I provide you the time to fulfill your promise. We still have so many outstanding, outstanding questions. And we would encourage you to write them into support if they're time sensitive, especially, and we will ensure that Rob and Jeff are both able to answer you directly again for any time sensitive questions. For any other questions that might not be as time sensitive, we will be resuming TradeFinder and Insiders next week. So back over to you, Rob. I hope everyone has a great holiday week and look forward to catching up with you all soon.
Yeah, my sentiments exactly, Zach. So when we're talking about these cycles, we talk about the 5-wave impulse pattern all the time, and it breaks down. And I've said in the past that I watch the 3-minute chart on the E-mini futures, the ES, on a daily basis. That's what I watch, and the same Elliott Wave patterns show up on a 3-minute futures chart as they do on a end of day chart. And so you have all these cycles, and they go down to microcycles and et cetera. And there's several different layers, and all you're doing is adding time frames to it. And so when I talk about how Elliott Wave works in any time frame, any security that has a decent amount of volume, it works. And so then when you start going to the upside, where you start going longer term, you get into cycles, super cycle, grand super cycle. These are longer periods that go for years, decades, etc. And when we look at the weekly chart, I'm going to bring up the monthly chart as well. Notice that once again, no 5-wave pattern, which is really unusual to not have a qualified 5-wave pattern in the weekly chart. Now, one thing that we can look at is the Elliott Wave long count, which is slightly different within the algorithm as far as how it's calculated. A lot of Elliottians that are really into Elliott Wave like to look at that in comparison at times, but when it really comes into help is when we have a situation like this, where we have so many patterns that don't have normal 5-wave patterns. So if we take a look at this chart in the Elliott Wave long count, you can see that a nice wave 4 formed back in October of 2022, so a year ago, and we've been moving to the upside here and getting close towards taking out this high that goes all the way back to January of 2022. Nice little zigzag pattern here that is formed right there. All this stuff still works no matter what the time frame. Notice the wave 4 right, or excuse me, the B wave right at 61.8. which gives you 100% extension just above those highs from December of 2021. So that would be all new market highs, taking out the July highs and going to new all-time highs. If we can follow through with this zigzag pattern. So I would argue that with the Elliott Wave long count and a zigzag here, there's a likelihood of that occurring. Now, we could have a corrective move first before that. And if we do correct on the weekly chart, once again, I'm going to cite that same 440 level that I looked at on the daily chart. We would want that to hold. So we could have a nice little complex C wave there in the in this zigzag in the wave 5. A nice little complex C wave on the zigzag within the wave 5 would add to the potential move higher. Now, the issue here is we're starting to kind of run out of time on this initial 5-wave pattern. So is that going to relabel? Will this go away? Will the Elliott Wave long count disappear just as the regular count did on the daily chart? That's a possibility. So what happens over the next few weeks into the end of the year is going to matter a lot here. As you can see that the outside part of this wave 5 box basically is the end of the year, 29th of December. All right, so now let's go a step further and go to the monthly chart. And now we're starting to get into super cycles, etc. Now, the issue with the SPY is, we don't have that much history. So in order to do something like that, you want to go and take a look at the SPX and looking here, same type of scenario. So perhaps taking a look at the INDU, the industrials that don't go much further back there either. Having issues with creating enough data to move back further. But there is a new version of the software program out with new data. So I will, in next week's, use the new software program to have increased data here to where we can take a look going back all the way back to we can go back into the 20s, etc., and really give a look at the grand super cycle. I looked at it a while back. It's been several months, but as you would probably imagine, the market tends to go higher, right? We have periods of corrections, but over the long term, the market tends to go higher. But you can have, where does your slice of life work in there? How close are you getting to retirement? You're putting money away. Can you handle, a spell that we had with the great financial crisis where it's going to take 10 years to get the money back? That matters with where you are in your life cycle, if you will. So, it's not as simple, I don't think, as just, put money away and don't ever worry about it. That's why we're traders, because we feel like we can have an edge and an advantage from doing that. So anyway, we will detail that with the new software next week so that we can look at the longer term trend and go way on back. With that, I echo what Zach said. Happy Thanksgiving, everybody. Thanks for spending some time with us tonight. Enjoy your holiday. Hope you get an opportunity to spend it with family, friends, and loved ones. And we'll see you next week. Take care, everybody.